Good morning, everybody. Mike Vaki, Princetontrader.com here for ntmarkets.com with your Tuesday morning pre-market webcast. Okay, daily chart of the ES. We're riding the upper Bollinger Band, but the bears were able to accomplish yesterday what they have not been able to accomplish during this entire run, and that is taking out the prior day low. The Friday low comes in, it came in at 1914 quarter. Bears were able to do 1375 yesterday, and that typically, not always, but typically starts the rollover of the daily chart. And what we saw in the afternoon was an inability by the bulls to go up and touch the upper band. So that's the first day they've missed the upper band in 5 sessions. And we're seeing a little bit of a push down today. We've traded as low as 1916. Yesterday's low is 1913.75. The bears must. They can't take any days off. They haven't accomplished anything. They have to push below yesterday's lows. I think there's been enough of a run up. I think there's enough upside to have the makings of a test of 1900, if not today, perhaps by tomorrow. What happens at 1900 is going to be pretty important. If round number 1900 comes in and turns out to be decent support, and that could stretch all the way down to 98.5, which were the old highs. So 1900 to 1898.5. If that comes in as support, then that would be a fairly pronounced higher low versus all these touches of the 50-day exponential moving average. It would be a higher low that didn't even threaten the middle band, and I think that would send us higher. The most likely scenario is that we get an orderly test of the middle band, which at the moment is 1892.78, but as the days go on, that's going to begin to rise rather rapidly, and you could see the middle band being up in that 1898 to 1900 area by the time it gets a test. So whether it's middle band or whether it's that price zone, it's going to be key. If that price zone breaks down, then the bears perhaps can get a little bit of a deeper push, but my absolute end of the line, can't push any farther, is going to be that 50-day exponential moving average. I would be very surprised if the bulls are truly back in control and that we're going to see higher highs for the rest of the year. And there's a lot of people out there saying that. More people saying that than have said it in a very long time. If they are right, then we should not see the 50-day exponential moving average again on this move down. We should not see much more than 1900. The inability of the bulls to hold the 1900 area would be another indication that the 2014 bulls do not have the same conviction on highs as the 2013 bulls did. Okay, so we have learned in this up move that the bulls still are ultimately in control of this market. What we're going to learn on this pullback is even more important, and that is, are the 2013 bulls back, or are we going to continue to have hesitation on highs? It doesn't mean we can't keep making new highs. It just means it isn't going to be as easy as it was last year. And people need to take note of that, because if it's going to be that way, then you can't just simply, set and forget longs. I mean, we've had a little bit of an up run here, but that has not been the way 2014 has gone. So I will be very interested to see if we get a bit of a pullback here, and if we do, where does it stop? Okay, everybody have a great day. Follow us on Twitter at Princeton Trader. Check out the website. Come check out the chat room. I'll be back tomorrow morning with another webcast. I will be on the radio this afternoon, 3 o'clock Eastern Time, 2 o'clock Central, on the Yorba radio program with Mike Yorba. Come check that out. I will tweet out a link where you can listen along, and I hope you'll come check it out. Okay, have a great day. Trade 'em well.